No, aloha, Joshua Hayes at bigwavetrading.com. Hello, YouTube community. It's nice to be back. Having a tough time making public videos right now because the workload is overwhelming. This market continues to melt up. My scans continue to proliferate with more and more and more stocks than I've ever seen before. The scanning process takes longer. The updating of the new signals each session takes longer. Order management takes longer. The intraday trading, even though it's slowed down, the amount of stocks that continue to show up just grows and grows and grows each and every day. And it's just very, very, very time consuming. Hey, I love it. It's been a rough ride for me off the March lows initially. But man, we're really, really starting to pick up steam, especially in my portfolio the past week. Things are really working out. Now, will it continue? Hell, I don't know. I can't predict the future. Nobody can. But I can tell you this much. There are a lot of sentiment indicators that I look at. There's short-term sentiment indicators, long-term sentiment indicators, short-term sentiment indicators like equity put-call ratio. Man, that's screaming. Look for a reversal. But then in some of my longer-term indicators that I use, like the VIX, it's still well above 20. Until it's below 20, that's where my sweet spot is. That's whenever I make the most money. That's whenever I get the cleanest signals, the best signals, the quote-quote prettiest signals that I can really push size into. But when the VIX is above 20, it's more volatile. You need to pare it back. Signals aren't as great. And just to let you know, markets don't normally top when the VIX is at 20. They top when the VIX is around 15, 14, 13, 12, 11, 10. On top of that, markets don't normally top when there are more bears than bulls in the AAIA survey, American Association of Individual Investors, and there has been more bears than bulls the entire move higher. Is the gap narrowing? Absolutely, but it has not flipped yet. This is the longest period of time that bears have remained higher than bulls while the market has advanced since 1982. We all know what happened from 1982 to the year 2000. Keep that in mind. The other things I look for is the riffraff speculative crowd in the futures market on the indices. They are still net short. They were all in short just a week ago. They're starting to cover, but they are nowhere near net long. On top of that, the Sharpies in the futures market, while nowhere near being all in long anymore, they are selling off some of their longs. They are still net long and are not short. Before the market cratered here in February, not only were there more bulls and bears in the AAII survey, Sharpies were net short. The riffraff crowd was all in. We do not have that set up right now. And more importantly, the technical indicators that I use as a guide to the health of the market indicate we should expect the market to continue. So, with that being said, we're not going to review any of the current big winners that we have right now. We do have them. I wish there were a few stocks that I had massive size in with big gains that I could just brag about and scream about on Twitter like everyone else does. But that's not my MO anyway. What I'm here to do is to show you what the current market looks like. Tell you that short term, we have some warning signs. Remember, even though the VIX is above 20, which is not indicative of a too complacent crowd, it did rally the past week while the market went up. Short term, that hints at a market that's expecting and getting nervous, expecting a reversal and getting nervous at these quote, quote levels. So the VIX and equity put call ratio, small warning size. Long term, until the VIX is down here, nah. Until the riffraff's all in long, nah. Until the Sharpies are net short, nah. Until there's more bulls and bears, nah. This market isn't at a tippity-tip top. On top of that now, let's look at all these indicators. And I say on top of that because that's already a lot to digest. But I tell you what, the indicators are confirming this move up. So we're just looking at the SPY on a daily. It's not only above its trailing ATR volatility stop, But the 8 is on top of the 21, on top of the 34 EMA, which is stacked on top of the 50. And now the 100 SMA is over the 200 SMA. We're completely lined up there. On top of that, we fired off of loose squeeze. We still have positive TTM trend momentum. Time segment volume, it's moving higher above the 0 line. PPO is moving higher above the 0 line with the histogram confirming. The Chaikin money flow uptrending, and the accumulation distribution line is just steadily rising. And I want to remind everybody, remember when the market was selling off here? Look at what the accumulation distribution line was doing. All of the selling was happening in the gap downs. Intraday, somebody was buying this market, and now here we go. So that's the SPY on a daily. On a weekly, same thing. Everything's lined up. That's TSV, PPO, histogram, Chaikin, accumulation distribution. Everything's lined up. Monthly, same thing. Everything's stacked. Trend, TSV, PPO, Chaikin. Look at that accumulation distribution line. Yeah, we should expect a pullback, but you can look for the 8, 21, 34, 50. And now these moving averages to act as support if we do. But we look good here. And this isn't even the key indicators that I look at, by the way. The ultimate one we're going to go over at the very end. QQQ, ATR, EMAs are stacked, SMAs are stacked, TTM trend momentum up, TSV, PPO, Chaikin, accumulation distribution. Freaking unreal. Actually, let's stick on here so we can show you the weekly. You don't want to fight this, guys. Monthly, yeah, we're extended. Pullback should be expected, but longer term, man, we're looking good. We're looking good. How come I'm not blowing it out of the ballpark? How come I don't have any stocks that are going up 500% in 2 months, 100% in 3 weeks, 4 weeks? How come I'm not getting a ton of quote, quote, pretty, quote, quote, hot, quote, quote, amazing signals? I'll show you at the end of this. DIA, stacked, 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 stacked. Chaikin, accumulation distribution, stacked. Weekly, stacked. Look at these indicators. Monthly, look at these indicators. Everything's confirming. We're still technically in a medium squeeze on the monthly on the DIA. Everything. Chaikin's a little weak, but still, it's above the 0 line. And then finally, last but definitely not least, the IWM. It's above the volatility stop. EMAs are stacked. Now we just have to get that 100 above the 200, and everything will be lined up. We're entering a loose squeeze. TSV positive, PPO's positive. Chaikin's moving higher and is positive. Accumulation distribution line continues just to move up. Weekly, we're lined up. Monthly, we're lined up, even though the IWM is lagging a little bit. It's got a ways to go, but monthly, we're entering a very long medium squeeze. So we'll see if that resolves higher. The last long medium squeeze did. No telling which direction it'll fire, but all indications are it's higher. Back here when it fired higher, TSV, PPO, Chaikin, accumulation distribution, all look strong. So very important. What we just went over, everything looks fine. Short term, we're heated. We should expect a pullback. Longer term, though, we look really good. But ultimately, how I judge everything is really based on this TSV indicator. And since I can't add background colors, at least that I don't know of to tell a chart, I'm going to wrap this video lesson up showing you the main indicators that I use that whenever I do get those great signals, or when I get any signal that's canceling quality, they beat on the top and bottom line in the most recent earnings season. Leader in its industry group. Industry group is a leader to the market. The overall industry group is a leader. When there's tons of relative strength outperformance, it's got an 80 plus EPS rating, especially 90 plus EPS rating. And if it's all A's or B's on the IBD, I'll push it there too. It doesn't even have to be a quote, quote, hot chart. But I'm going to show you right now how that isn't quite in alignment. So in that regards, I'm going to start here with the QQQ. First off, I'm going to remind everybody, when it comes to my returns, the best returns that I accrue are always some monthly time frame. When the VIX is below 20, this is when the absolute best returns for me happen. You can see here that in 2003, it goes below 20 and maintains below 20 till about 2007. No surprise, my biggest returns ever in my career came during that time. And I started to trade in 1998. VIX was in between 20 and 30 here. Did well in 1999, and it's probably because I did focus on the best stocks. And I used to get beautiful max green bot filled charts back in the day. I always tell all current members, if you ever want to look at what charts used to look like on my end, go back and review all my past big winners from 1998 to 2008. I stopped updating it in 2012 when the charts stopped really showing up, and or when they did show up, they just weren't working like they used to. But from 1998 to 2008, for a full 10 years, there were certain chart setups that had certain volume, balance of power, and price characteristics that I could just push size and be confident that they would do well. Look at the setups on the past big winners page. Look at those returns in the short amount of time frame. And I'll ask you, do we have any of those kinds of setups anymore? Do we get those kind of returns anymore? No. But we were getting them even here when the VIX was below 30 and above 20. So even here it was good. But this is when things were really good. You can see, obviously, we're in bear markets here, above 30. I don't get very many long signals. It's very rare I get long signals when the VIX is above 30. But this entire rally, the VIX has been above 30. This is unlike any other time in history. This has never happened before. Any other sustained move above 30 and hold above 30 on the VIX has led to a downtrending or sideways market. Never experienced anything like this, so I was a little late to the party, focused on the leading stocks that had the 821.34 stack that were in tight squeezes. That's my fault. But the bottom line is we're still not below 20, and we're starting to get some nice gains. I'm basically fully invested. Tight trailing stops, ready to go to cash if I have to, if the market reverses. But when we're below 20, like we were here, good things happen. In 2013 to 2015, really good things happen. 2017, great things happen. 2019, good things happen, but it was kind of a warning sign for what we're seeing now. So just remember that. VIX below 20, I kill it. Get great charts. 2019 was the first year that really didn't happen where my great charts didn't show up. That being said, tons of winners. Very, very good year until this sell-off in the market. VIX below 30 starts to get a little bit better. Finally started to stabilize around end of July. No surprise, that's when my portfolio started to do well, and it's really started to do well lately. But the most important thing that I've always noticed that's lined up is the time segment volume on a monthly time frame. In that regards, the TSV on a monthly time frame has been negative since September of 2018 on the SPY. It finally started to turn positive in July. That being said, this moving average line is still trending down. Really great things don't happen until it starts to trend up with the lead line above the signal line. And as you can see in 2017, great things happen. As you can see in 2013, great things happen during this time period. As you can see in 2009, great things happened right here. And we can go back further, look at the 90s with the SPY. Great things happen. 2003 to 2007, great things happen. So when that moving average is moving up with the lead line above the signal line, great things happen. That has only recently changed. But hey, we're in the right direction. It's pretty awesome. Now look at the QQQ. It switched back here in April. Really great things have happened. Really great things happen. Really great things happen when it's green and trending higher, especially with that moving average curling up. As you can see on the QQQ, the moving average is curled up. So in my opinion, pullbacks are to be bought. Rips. You want to buy the dip, not sell the rip right now in the QQQ. The DIA, finally getting those green, but the moving average line, as you can see and tell, still trending lower, just like the SPY. But here's the biggest aha moment during this entire underperformance off the March lows until recently. The IWM. When the IWM is positive, 2003 to 2007, with the SPY, remember, great things happen. Remember, that was my best period with returns. 2009, good things happen. 2013, good things happen. SPY was stronger. It's more about big caps there. Excuse me, that was 2013, sorry. 2017, notice the TSV, green, green, green. great things happen. But now look at what happened in July of 2018. It went bearish, and it has maintained a bearish posture the entire time. It's been over 2 years, and the IWM is still bearish. And it's still not really close, quote, quote, close to crossing. When it crosses, this moving average line will still be moving down. It will take a few months before it starts curling up again. But by that time, the IWM could be at new all-time highs. And then we can expect great things to happen. But if anybody out there is wondering why it took me so long for my setups and my signals to start producing wins, like outlier gains, and why I don't have any huge winners right now, first off, there's only one stock that's got even a remotely quote-quote pretty chart out there. That doesn't help. In really strong markets, there's anywhere from 5 to 10, and I can really get size into those. But when this TSV on a monthly basis is negative, and the VIX is above 20, my personal methodology that kills it and rocks it during times when the TSV on a monthly basis is green and the VIX is below 20 just isn't going to shine. That's why you got to stick to the leaders. You know, the Wayfarers, Neos, Teslas, Apples, Amazons, Peloton. You got to look for squeezes. And what's a squeeze? This is a squeeze. Let's bring up the QQQ. Look at that tight squeeze here. See these yellow dots? Look at what it led to. SPY, same thing. On a month, this is just a monthly. This is rare. Tightest squeeze on a monthly. Look at what happened. So you look for these red and yellow dots in these leading stocks. And when you get them, you know, something like AMD. Let's look at what AMD on a weekly or a daily. You know, it had that long squeeze. And then as it fires out of it, should have been focused more on the leaders, bottom line. But hey, I've learned my lesson. Next downtrend, early reversal, I'll be focusing on those stocks that have extremely high IBD rankings, strong accumulation distribution lines, and are in leading sectors that are outperforming the market. And then I'll wait till the IWM lines up on a monthly time frame with the VIX under 20, with my hot chart showing up, and then I'll switch back to there. But a lot of lessons have been learned. Things are looking good right now. That being said, short term, expect the market to be a little bit rocky, but longer term, everything I've shown you points to a market that should continue to move higher for a significant period of time. And don't forget, the Fed just said this past week they want inflation to go ahead and run over 2%. They basically, in their verbiage, made it pretty clear they're not raising rates anytime soon. And at this debt level that the United States has, it's not going to happen. Don't expect rates to rise until we start seeing inflation well above that 2% mark. And as long as that's the case, there's only one place to go, the U.S. equity markets. All right, everybody, I'm going to wrap it up here. If you enjoyed the video, give me a thumbs up. Questions, comments, concerns, statements you want to make, leave them in the comment section below. I'd love to hear from you. What are your favorite stocks right now? What do you think the market's going to do? I would love to know what you're thinking out there. If you haven't subscribed, ring the bell. And hopefully, time permitting, I will see you next weekend. But another reason, really quick before I wrap this up, why I haven't been making videos, not much has changed in the market the past few weeks. Look at the QQQ. It's the same thing. There's really not a whole lot new to talk about. Just happen to have time and been hearing more, oh, the market's going to top. Yeah, maybe in the short term. But longer term, things look really good.